All right, Anthony, I think it's time.
Is it time? I was just about, great minds. I was just about to ask you. All right, folks. Well, we are going to go ahead and get started. I know that there'll be more folks joining in along the way, and this is being recorded. So everyone will get a recording of this, or the replay of the recording basically after we're done today. So if, even those who are not on the call or on the webinar can get their questions answered. So let me start off. First things last, welcome to the Royalty Exchange Artist Office Hours. This is our first session of this kind, so thank you all for joining us today. My name is Anthony Bruno. I'm the Director of Communications here, and with me is Gary Young. He is our co-founder and Executive Vice President. And basically what we wanted to do was have this opportunity for everyone who we've been interacting with over the years, or even if it's only been for a few days and recently, to have the opportunity to ask us really any question about us and our service, or anything surrounding that you like that we can try to help with. That's simply the intent of it all. So we've got a number of questions that were submitted upon registration in advance, and we're going to go through those first. And then we're happy to answer any questions that may come up along the way, follow-up questions, things like that. And for our housekeeping, the way to do that is if you look at to the bottom of your screen, you're going to see a little Q&A tab. Button. If you select that, you can type in your question and we will see it, and we will then get to those as we go through the different questions that are along the way. There's a raise hand feature that we're really not going to be using too much. I think we've got one person who's raising their hand. If you have a question, the best way to really do it for us to be able to see it is to type it in to the Q&A feature. It's going to be the easiest way to handle all the questions with the number of people that we're likely going to have as we go through this. So we could change things up later on if necessary, but that's basically the main points here. So again, Q&A at the bottom of the screen. We'll read the questions that we got in advance, and like I said, it's going to be recorded, so you'll have the opportunity to review all of this after the fact. So with that, Gary, do you have any opening statements that you'd like to get into, or should I just start asking the questions right off the bat?
Just that as we're going through these questions that everyone submitted in advance, please, we already have one question. Thank you, Alan. And we're gonna go through all of those, and I'm excited. I'm looking forward to talking through all this.
Okay, great. Well, so as it so happens, the question that was already submitted via the Q&A feature is basically the first that we've had in the those that were left in advance, which is basically, there's a lot of questions about what is Royalty Exchange, what do we do, how do we work together? Some people don't understand our business. So, basics, please, Gary,
Yeah.
just kind of maybe give them the rundown.
Yeah. So what is a royalty exchange? Okay. So fundamentally, royalty exchange is a marketplace, right? So we connect you with investors who are interested in investing in your back catalog, right? And what that fundamentally means is that we act as your agent to help you raise money from the work that you've already created and that is already earning royalties, to put together a deal that makes sense, that allows you to fund your career, uh, buy a house, invest in other things, like, kind of runs the whole gamut. And so we work for you to help you put together a deal to raise money from your back catalog, right? It's important to understand that we do not buy royalties ourselves. We are the middleman here, right? And so on one side, it's songwriters, artists, producers, people that own valuable intellectual property. And then on the other side of the marketplace, there's about 27,000 investors that are interested in buying those income streams or giving you a big advance on those income streams. And so we connect the two and we make deals happen, and we handle the process soup to nuts. So from looking at your catalog, identifying what are the most valuable songs, working with you to figure out what your goals are, what you're trying to accomplish, and putting together a valuation, putting together the marketing, doing the due diligence, affecting the transfer, collecting the investor's money, whole thing. We do all of that. Anything I
Exactly.
should add to that, Anthony?
Yeah, let me just fundamentally, like Gary said, we're a marketplace for buying and selling royalties. People that are on this call are likely those with rights that are looking to have sell portions of to raise money, and the other investors will acquire those as a way to collect royalty income going forward. And there's a number of questions that we'll get into the specifics on some of those basic details. But fundamentally, our business is a marketplace for buying and selling royalties. What I might add is that what we don't do. Okay, so there's a number of questions here related to that you're signed up with Sound Exchange, for instance, and how are we related? We're not related to Sound Exchange at all, other than the fact that we both use the word exchange in our titles. Okay,
Yeah.
we have nothing to do with Sound Exchange. We do not promote your royalties. We do not collect royalties on your behalf. We do not provide services that allow you to generate more royalties than you are today. These are all things that Royalty Exchange does not do. Apologies for any confusion, but that's simply the case. We are simply a marketplace where that if you're currently earning royalty income, you can sell a portion of the right to collect that income to an investor to raise more money today. Full stop. How's that?
Yep. I think that's good.
Okay.
Yep.
So then just going on to the next question here, maybe just a little bit more details, basically. There's just so many questions we can get into here. I think I'll start with this one. What is the best way to retain your copyright but still advance royalties, get an advance on royalties?
Yeah. So most of the deals we do not involve the copyright. So if you imagine, right, the copyright is something that is a bundle of rights. There's a bunch of different things you could do with the copyright. What we do is we work with the portion of the copyright that relates to the income that you earn from people using your music, right? And so most of the deals we do, the songwriter, artist, or producer is keeping their copyright and is assigning the income to an investor. So there's a couple different ways we do that. The most common way, if in terms of an advance, is we do something called the term advance. And the way a term advance works is it's basically like a royalty lease. So the investors buy the right to collect the income from a collection of songs for 10 years. And then at the end of 10 years, those royalties revert back to you. So that is the most common way you can basically raise money, get an advance, but not sell your copyrights or assign your copyrights. Okay. And so that, I would say, that's definitely the most common way people do that. Sometimes we'll do buyout deals where the copyright isn't included as well. So you can raise even more money, but you are selling the income, right? But you are maintaining the copyright. So that's how we do it. And there's one of the big things that we've done since day one has been separating the copyright from the income, right? So traditionally, almost all deals in music, right, involve some sort of assignment, whether it's temporary or permanent, of copyright in order for someone to get an advance. We don't think that those two need to be paired together, because you can assign the income, you can keep the copyright. And so that's what we do. And so fundamentally, almost all the deals we do allow you to raise a large amount of money without giving up the copyright.
And Gary, maybe you also refine that a little bit further. So yes, not only can you sell your royalty income without selling the copyright, B, you could sell for a shorter period of time. It's a temporary sale, basically, at least as you put it, for 10 years.
Yep.
But also C, maybe talk a little bit about, while it might be, you might sell in perpetuity, right? Like a lifetime deal. It doesn't have to be for your entire percentage of royalty income. Can you maybe address that real quick?
Yeah, actually, yeah, that's great. So a lot of the deals we do also just involve a percentage of the income. So for example, if you imagine you're making $25,000 a year from your catalog, right? We can look at it and say, okay, if we sell 50% of the income, we can get you this amount of money. And so you can collect and pull forward a lot of the income, like basically via an advance or sale, but then also maintain some ongoing interest. And that's certainly a very popular option for what we do, because it allows you to get the best of both worlds, right? You get that large amount of cash today, but also it's not the end of the story, and you're still collecting income on an ongoing basis.
Right. And then I'll just finally add one little additional filter to it, which is basically that applies to any type of royalty income that you might be earning. So you can do 50% of just your public performance royalties that you collect from, say, ASCAP, while keeping the other 50% of ASCAP, and also all your publishing and all your sound recording and everything else. Like, we can break it down exactly by copyright type, as well as percent of copyright type as well. It's all very highly filterable.
Yeah.
and it's
Yeah.
based on what is your plan and what your goals and how much you want to raise, which actually relates to one of the other questions here, which is quite simply, how can I raise a massive amount of money? And so maybe Gary, you could talk about
Yeah.
how you can do that, but also really the plan behind how much are you actually trying to raise and why? Because I think that's
Yes.
almost
Yeah.
more.
So yeah, there's two schools of thought on this, and I hear both quite commonly. So the first is I'm going to sell everything I have, get the largest amount of money possible, and that can make a lot of sense, right? Depending on your situation. The other commonly, you know, common story that I hear is okay, I'm trying to accomplish this specific goal, right? Maybe I'm a songwriter and I want to release an album as a performing artist, and I need $20,000 to help with PR. I need $50,000 to pay for the studio time, get a big artist to feature on it, all that stuff, right? And if we know that, then what we do is we work backwards from that to figure out what's the smallest amount of your catalog you can sell or get an advance on in order to accomplish that goal, right? And so the basically that, I mean, that's the answer to that question. I think the it depends on what you're looking for, but if you want to get a massive amount of money, then you do a buyout deal for all of the royalties you're collecting today. That's how you maximize the amount of money you get.
All right. Next question here, which is kind of related, which is, what are the pros and cons of selling a catalog?
Yeah. So I would say fundamentally and I'm going to start with the con, right? So the the cons really are: one, you're not going to collect that income on an ongoing basis anymore. Two, it's if you don't have a plan for the money, it it's probably not a good idea, to be frank. And I know people are always surprised when I say that, because like all we do is sell catalogs. But if you don't have a plan and you don't have something specific that you want to use the money for, then I generally advise songwriters that you probably shouldn't, actually. And the reason I do is because nobody will buy your catalog with the expectation that they're going to lose money. And it's something that I find very, very interesting. And this doesn't happen all the time, but I'll talk to a songwriter who's just, I want to sell my catalog because I think I can just get an amazing deal. And I said, well, why do it? It's like, well, everyone else is doing it. It's like, well, that's not a great reason. And then the second thing is that you might get an amazing deal and the investor may lose money on it, but I wouldn't count on that, because there's smart people on the other side of the table, no matter who you're working with, that have some theory about what it's worth, and what it's worth today is generally going to be less than what they expect to make out of it over time. So those are the cons, right? The pros are you get a substantial amount of money, right? You also, the way we work is we don't include future works. So you can take the songs you that you created in the past that are still earning income, you can sell them or get an advance on them, and then you own 100% of all the stuff you do in the future. So when it comes to figuring out where you want to go with your career, if you want to bet on yourself and you want to own all the stuff you make in the future, then it's a no-brainer to work with us, right? Because publishers, record labels, distributors, independent admin companies, they all want a piece of your future stuff. We don't. We don't think that's that. Well, I actually, it's two different approaches. Ours is that you can raise money and keep everything in the future, and theirs is generally not that.
And that's a
So
great answer. And I don't want to interject real quick, because it kind of pegs on another question that's here that says, how should I compare an advance versus a sale? And you're kind of touching upon this right now.
yeah,
A sale is for, you're selling your interest in your earnings for what you've made in the past, which frees your earnings in the future to be all yours. Whereas an advance kind of blends the two.
Yeah. Yeah. So generally, if you get an advance with anybody aside from us, all of the future stuff that you release, things that are maybe in the pipeline that have been released and just you haven't gotten paid on, and things that you will release in the future, those are going to be encumbered, and you're not going to get the income from those because it's going to be used to pay back the advance, right? So that's a big difference between the two. And then the other piece that I think, excuse me, that warrants mentioning here is that I'm not a tax advisor, neither is Anthony. So this is for informational and educational purposes only. But when you sell an interest in a copyright, depending on your circumstances, you may be able to elect to take capital gains tax versus ordinary income. Now, what does that mean? That means that if you're in the highest tax bracket, you're paying 39% at the federal level in taxes. So that means basically every $10 you make, $4 goes to Uncle Sam. If you sell an interest in a copyright and you take capital gains on the sale, then you can pay the capital gains tax rate. And the capital gains tax rate is 20%. So if you're in the highest tax bracket, you can cut the amount of taxes you pay in half, right? And that is enormously powerful because say you sell something and you get a decade worth of income today, right? And you take capital gains, that means that the money you get today will be higher than the money you would get if you just held it for 10 years because you're you're not paying the income along the way, the income tax along the way. So that's the other big difference between the sale and an advance. There can be really, really powerful tax consequences for doing a sale that helps you have more money in your pocket.
And I'll add one more small quick one in that
Yeah.
there's different kinds of advances, but some advance companies will take a look at your catalog and say, okay, well, here's what we project you'll be earning over the next, however many years, 5 years or so, and you can pay us back only a portion of this over that time frame, so you still get money in your pocket while you're paying us back.
Yep.
And that's fine, but the one issue is that if they're wrong and you earn less than they've projected, you're now paying more of your earnings to pay back that advance. Whereas with a sale, even the temporary sale,
Yeah.
there's no you're not held to a repayment schedule or anything else. If the investor pays too much, let's say an investor buys a 10-year term and they paid more than the catalog makes in 10 years and they lose money, you don't owe them anything, right?
Yep.
It's called shared risk. So I wanted to add that one as well.
Yeah.
So switching gears, there's a couple questions here related to costs.
Yes.
What are the costs associated with this? How, do I have to pay any commissions or subscriptions or, how much will I have to pay royalty exchange, et cetera, et cetera? There's a number of questions that I'm going to bundle into this one.
Got it. Yeah. So traditionally, our fee is 15% of the final price we get you. Until July 1st, we lowered that fee to 10% because we're trying to do our part to help and put more money in artists' pockets during the pandemic. And the reason we do that, and the reason we charge a percentage of the final price, is because we believe fundamentally that incentives really matter. And we want to have our incentives aligned with yours. So the more money that we get you for your catalog, the more money we make. So we're sitting on the same side of the table versus someone who's just trying to directly buy your catalog. They're sitting on the other side of the table. They're negotiating against you. The more money they pay you, the less money they make. So they're going to try to grind you down to the lowest price they think you're going to accept. We have the opposite approach, right? We want to get you as much money as we possibly can, right? And so that's how the fees work. That's the only fee, right? And the only time you pay it is if we make a deal happen, and deal goes through, we complete the transaction, and we handle, and that fee covers literally everything.
So that's the only fee you're paying with us is once the deal closes, we take our commission. That's the only time any money goes from you to us.
Correct.
Okay. And then the only other fee they pay was whatever the tax is on what they've made from the sale, which you addressed previously.
Yep.
Okay. So another questions here are, how do I get a quote for what my catalog is worth? And it kind of dovetails into like, how much do you offer an album on average? And I think that it's worth talking to both of those at the same time to kind of
Yeah.
differentiate how we come up with these valuations.
Yeah, yeah. So basically, to get a valuation or to get an appraisal, we need the royalty statements from your catalog, right? And so we look at all the different places where you're earning money from your music. We look at the spreadsheet files that those payors provide. We crunch the numbers. We look at a bunch of different quantitative characteristics of catalogs. So how long has your catalog been making money? What are the sources of income? For example, if you have a catalog, say that's with ASCAP and you're making a ton of money from radio, generally that radio money declines very substantially. So a catalog dominated by radio earnings that's very young is generally worth less on our site than something that's been around for a long time and perhaps is making a lot of money from streaming. The other thing is on the publishing side, we look at the sync, right? And syncs are amazing because you get a huge chunk of money for someone to use your work, right? The investors in our marketplace don't value the syncs particularly high because they're one-time payments. You may never get another sync again. So if your catalog is really dominated by sync placements, it tends to be worth less on our site. Then the next question about what do we pay for an album on average, it's not the right question. So basically what we look at is we look at the individual songs, how much they're making over time, right? And sometimes when we look at the catalog, you might have 5 albums that you've released, and there may be one song that makes up 90% of your income. And so then what we'll do is we'll recommend, let's just work with this one song. You keep everything else because that's where most of the value is in your catalog today. But then you keep that other income and the potential upside that comes from it. So, and then the second piece is most of the folks that we work with are songwriters. So, and it's pretty rare in today's music industry where a songwriter, unless they're the artist, also, where the songwriter has written all the songs on an album, right? And so basically, we go on a song by song basis. We figure out what the most valuable songs in your catalog are. We work backwards from what your goal is, so that we can figure out what the right deal is for you, and then we put together the transaction.
And I think it's also worth noting is that this is not our offer to you. And I think we want to stress that part. So we're not making you an offer on the album. What we're doing is maybe explain that part a little bit. If it's an auction, like maybe, or if it's one of the more instant offer type things they see on the site, maybe explain how those numbers are generated and
Yeah.
for what purpose.
Yeah. So we look at the catalog, and for reference, we've done about a little bit more than 875 deals that total about north of $75 million in the last 4 years. And so we have a lot of data on what investors will pay for different types of catalogs. And so what we do is we get all your data, we analyze it, and then we come back and you say, okay, this is where we would start our auction because we do this by auction primarily. And this is where we expect it to end based on these other catalogs that had similar characteristics, right? And so when we give you a valuation, it is not what we would pay for it, not what we just think this sort of amorphous abstract valuation is, because honestly most of those things are bullshit. Because if somebody like a third party firm that's giving you a valuation says this is what it's worth, and then you say, well, would you buy it at that price? And they're like, well, we don't do that. And so our data is based on what people have actually paid for things, which is the only valuation that you can trust. All the other stuff is like it's theoretical, and I distrust theory generally. But and so there's that piece, right? So we look at other catalogs that we've worked with. We give you an estimate of what we believe it will go for based on the investors in our marketplace, and that's what you walk away with. And then you can say, I want to do it, I don't want to do it, and either way, we part ways as friends if that's the case.
Right. But I think it's important to know that when we're talking about auctions, for instance,
Yeah.
a lot of times recommending the starting price range it's really important to note that that is a starting price aimed at getting to a higher amount, which I believe we also kind of give a range on as
Yeah.
well. And
Yeah.
we're usually right on those things. We
Yeah.
really do fall within the high end and low end of what we
Yeah.
expect the market to go for. But
Yep.
it's really important to know that on an auction, that starting price is
Critical.
a starting price, and
Yep.
it's created to get a maximum amount down the line, right? On the other side, we have a tool where you can have your catalog analyzed called the Know Your Worth tool. You might see some an offer that you can immediately accept. That's got a slightly different
Yeah. You want me to talk about
process.
that a little bit?
Real briefly, without getting, I mean, it could get a little in the weeds, but I think
Yeah.
it's worth noting what that is, because that is a little different.
Yeah. So the tool is called Know Your Worth, and Know Your Worth works with the ASCAP and BMI currently. And basically, what you do is you go to our site, you fill out a form, the Know Your Worth form. It takes about 90 seconds. We analyze all of your statements, and then if there is an offer from an investor that matches with your catalog, we'll display it to you. Now, that is an offer that the investor has made blind. They have
Blind.
no idea what songs are in your catalog, because the way that tool works is we look at the quantitative characteristics of your catalog, right? It's the math. And sometimes that means that, if the investor knew what was in your catalog, they might pay more, but that's the
Or
blind,
they might pay less.
or they might pay less, right? And so Know Your Worth is a tool where, one, you could see money good offers. These aren't like someone saying, I'll pay you this much money. That's like, if you accept it, you're going to get that much money, right? And so it's a tool that we put together. It's free for you to try out, and we only charge a fee if you accept the offer. And so that's a Know Your Worth tool. It's fast, it's blind offers, and it's quite useful to sort of triangulate what someone would actually pay for your catalog, so you can figure it out.
All right, I'm going to take a quick second to address some of the live Q&A ones real briefly here. So some of them we answered. What percentage of the sale does Royalty Exchange take? Again, typically it's 15%. Right now it's 10
Yep.
through, I believe, July, or until July
Yep.
as a discount for the current situation. We have, let's see here. We have one that says, does Royalty Exchange help with endorsements? No.
We do not.
That's not what we do. We have one that says, we have a successful catalog of originals, 1,500 songs, well-known among our fans. Our goal is to expand it to a wider reach. How do we get there? That's not what we.
Yeah, it's not in our.
That's not our lane. We sell royalty income to investors, basically. So we don't really help with that. Which is more profitable, lucrative to sell 100% at once straight away, or negotiate them below 100% and receive profits monthly or yearly? I think you kind of got into that a little bit. It sort of depends.
Yeah, it totally depends. Sometimes it makes a lot of sense to do a deal for 100% of the royalties. Sometimes it makes more sense to keep some interest, but I can't generally say that one is more profitable than the other, because it depends on you.
It depends on how it's earning.
Yeah.
Which is a similar, also interesting question. Is it possible to sell my royalties to more than one buyer? Or in other words, to sell them to several buyers simultaneously? So I'm gonna interpret that as being splitting up a catalog and then selling it in chunks.
Yeah, so we don't do that. And there's a bunch of reasons we don't do that. The only way you could sell your royalties to multiple investors at the same time would be to split them up by song. So one investor could buy one song, and we would hold separate auctions for this. And we have done that before. But you can't come to our site and say, okay, I'm going to take my catalog, and investor A is going to buy 25%, B is going to buy 50%, and C is going to buy the other 25%. We don't do that.
Then the reason is basically because that's considered then a securitization, and there's a lot of regulation that comes down from the SEC that makes things a lot more complicated. But let me just ask a quick question on that, Gary.
Yeah.
If you did it sort of in stages over time, though, perhaps is that possible? So let's say you work with us for 25% of your catalog today, and then 6 months from now you want to come back and do a second deal. Is that possible?
It's possible, and it sort of depends upon basically, it depends upon what the catalog is doing, how it's changed over time. And so it's not a cut and dry yes. It's not a cut and dry no. It just depends on the catalog itself.
Okay. And then here's one that says, let's see here. I'm trying to understand this question. It's hard to read. Basically, it's about an artist that has 100,000 K, I believe that means dollars, on a recent album. How would your approach work with the exchange?
Well, we'd look at the catalog, we'd look at where the earnings are coming from, we'd look at how old the songs are. It sounds like they're pretty new, and then we would put together what we would expect to be able to get at auction, and you'd have that information. Then you would decide if you'd want to move forward with us or not. And if you did, we'd go out there and raise the money.
And I think it's worth maybe talk a little bit about that. Sounds like it's rather new portion of things. I think it's important people realize
Yeah,
that our investors are looking for royalties that have sort of stood the test of time to a certain degree. They look at the length of
yeah,
time some royalties have been earning as a way of determining whether or not it's likely to continue earning. What they're
yeah.
not doing is betting on new releases taking off.
Yeah, yeah. So if you imagine, record labels and publishers make bets like that all the time, right? And they, one of the big things that they do is, they bring new music into the world, like your music, and they try to get it out there. We don't do that, and the investors in our site don't do that. And so the other piece that's important is the older your catalog is, and the more consistent the earnings are over time, investors are going to pay more for that than something that has been out for a year, and it's not clear how the earnings are going to change over time. I mean, they almost always decline, so it's pretty clear that they're going to go down right after the release, and so those fetch a lower price in the market than something that's older.
Great. A few more questions here then. Do you do more than music royalties?
Yeah, yeah. So we've done a lot of different stuff. So we've done royalties from a trademark, from a publishing company. We've done some film deals where a producer of a popular film had an interest in the film and got paid royalties every time it played. We've also, in one that is a personal favorite of mine, royalties from the sales of Cherry Garcia ice cream from Ben and Jerry's, which is super cool. So yeah, so we work across the board. I mean, we can't necessarily work with everything, but we do a lot of other intellectual property income streams.
There's a question here about some artists produce several different genres of music, and so how do I know what type of genre a buyer is interested in? Kind of relates a little bit to the other one, but is it?
Yeah, no, I think it's different. So I think the the audience of investors that we have is so large that there are fans of every genre in our network of investors. So that is, I wouldn't worry too much about what genre investors are interested in. It's I mean, make the music that you love to make, and if people like it and listen to it, there's going to be investors that value it.
And I think it's worth noting that within the music industry, that's actually a common and an understandable question, because it's like, okay, this publisher likes this kind of genres and
Yeah,
things like that. With investors, they're looking at the royalty income produced. They're generally, with a few exceptions, generally unconcerned with
yeah,
really even the song itself, let alone the genre.
yeah. I
I
mean,
mean,
well, I think it's not, except with the Know Your Worth tool where it is a blind offer.
mhm.
Um, the artist and the song does matter to the investor, and but like I said earlier, like we have fans that go crazy for metal. We have investors that love hip hop. We have investors that write us every day asking, "Hey, is there any classical music that's coming up for auction?" So
Right.
it runs the gamut, and it yeah. So they're
Yeah.
they're all they're omnivores
I
when
mean,
it
guess
comes
what I'm
to
saying is
genres.
that they
Yeah.
don't necessarily need to be a fan to be interested.
Yep. No, totally not.
Is what I'm
Yeah.
trying to drive at. Okay.
Yep.
Um, let's see here. I meant to ask this before, and I didn't see it here. How long does it take to assess a catalog? Going back for a minute to your
Yeah.
assessment.
So it depends on the catalog. Generally, with something that a catalog that's earning from ASCAP or BMI, if you use the Know Your Worth tool, it takes us about 90 seconds. With a very large catalog that's earning from a lot of different sources, it could take us a week, sometimes 2 weeks to put together the analysis. But the analysis that we put together, we do it for free because we think it's important for creatives, artists, songwriters, producers to understand the value of their income stream, and we do that for free, even if you decide not to work with us. So it's free, and it takes us usually it doesn't take us more than 2 weeks, but yeah, that's usually the top end.
What's the minimum requirement to put a catalog on the bidding table?
Yeah, $1,000 a year in income, and yeah, and so that's the minimum. And then the other thing that I think is important to talk about is we don't work with every royalty payor out there. Some we do, some we don't, and we're working to expand the universe of publishers, distributors, record labels that we can work with. But some of them have restrictions on assigning the royalties. There's a lot of back end ongoing work that we're doing in the background to try to expand that audience of folks that we can work with. So, but at the minimum, if you're making $1,000 a year or more, we can probably work with you, assuming it's coming from a source that we work with.
And on that point, there's a question here. Does your company cooperate through BMI, ASCAP, et cetera?
Yeah, we do.
All right, so let's see. How many songs got investment in 2009 from your website, from our website? So how many deals did we do last year?
Yeah, so we did about 250 deals last year, raised north of $18 million for songwriters, artists, and producers.
Let's see here. I understand that artists will still own their music. I'm sorry, this is a hard question to ask. I'm gonna have to try to interpret it. I understand that artists still own their music, though upon investors, exactly would profits be truly expansive for the artists? I'm not.
I have no idea what that means.
Yeah, I think I think what they're trying to get at is that maybe what's in it for the investor. Like, why does anyone want to buy this if they're not getting the copyright? That's my interpretation, and it's one that we get anyway, so it's worth addressing.
No, definitely. So the investors are interested in the income that your music produces, and so they're buying it for that. And if you imagine, right, you put your money in a bank account today, right, and you're going to get maybe 1% a year on your money, and there's a lot of investors out there that need to make more than that a year, right? And so as part of their strategy for making more from their money, they'll buy music catalogs that generate income like yours. So why they do it.
All right. Let's see. This one we answered. It was a question around how much does previous performance of tracks weigh in catalog valuation versus tracks getting placed in sync. I think you addressed that. We place far higher value on activity and usage than we do on placement.
Yep.
Radio hits versus unreleased songs. How to use us for both.
So unreleased songs.
Can't do anything.
Nope. Radio hits. I think the way to think about it from a radio hit perspective is, you have a song that's making a lot of money from the radio. As the radio royalties decline, you can sell an interest in that song on our site and almost get like a second radio bump, right? And pull forward a lot of money, because most songs make 80% of the money they're going to make in the first decade in the first 2 years, right? And so basically it's like you collect the big radio money, and then you sell and you get a large amount of money from us, and then you go write the next hit.
Right. This is an interesting question. Any thoughts about the impact of COVID-19 to the music industry?
Oh man, lots of thoughts, and I know you have some too. So, I mean, I think fundamentally there's a big shift in live. I mean, basically it's gone away, and then the question becomes, when it does come back, our attendance numbers going to be the same as they were before, and our venue is going to be open to the same capacity, right? So if you have 1,000-seat venue and they have permission from their local government to reopen, is that permission going to be like, well, you could only fill it to half capacity? And so I think this is the first macroeconomic trend that seems to be pushing back against the huge growth in music industry income that comes from live. And I think live music live music is going to come back. It's probably in the near term going to come back in a smaller and less profitable form. And then hopefully it comes back in full force, within the next 2 to 3 years. But if you're out there and counting on shows to pay for your life, I think you're going to see a big hit, and I think you're going to see a big hit for probably 18 to 24 months.
And I think what's also worth noting is that the way the music industry has always worked, and I covered the space for
a long time,
nearly a decade with Billboard, is that the music industry tends to focus on what's the big bucket of revenue. And everyone just kind of doubles down on that. It's like, hey, I'm making all this money from this, and I kind of don't pay as much attention to these other smaller streams. And I think that when you saw, if we're dating myself big time, but you saw the original Napster come along and the disaggregation, down to digital sales and digital transition from physical, right? CDs were the big money maker. Then it was digital and things like that. That's when people finally start to realize, hey, there's other revenue streams and maybe I can maximize those better. And right now is when we're going to start seeing that with what you just talked about, Gary, with the live situation, right? As live decreases, it's suddenly like, okay, that just stopped. Where else is my revenue coming from and how do I maximize that? And so I think you're going to see a number of things on that. And first and foremost, I think it's really important to keep an eye on the streaming subscription services and what's there, and not on the activity. So it doesn't really matter so much about how much people are streaming from month to month, but how many streaming subscribers are these services growing quarter to quarter. That's the thing to keep an eye on. So far, it seems positive, and that's good.
Yeah, because I think that, and I think I want to elaborate on one thing you said there, because it's critical to understanding what the future is going to hold. All the news reports is like streaming, the amount of time spent on a streaming service has gone up 20% since the quarantine. That doesn't matter for your income, right? Because if you imagine Spotify gets this big pool of money every month from all their subscribers, like $1 billion a month, right? And basically they take 70% of that money and they divide it up among all of the rights holders, right? Based on how popular their music is. So if Spotify stops growing subscribers, that pool of money stays the same. And thus, if your song is streamed 20% more, that won't necessarily mean that you're going to make 20% more unless the subscriber count grows. So one of the things that, when I'm talking to artists, managers, lawyers, songwriters across the board, it's like the number that matters is new subscribers added, net new subscribers added by Spotify. And if Amazon or Apple break it out in their public reporting, which sometimes they do, sometimes they don't, that's the number that matters, because that is the pie expanding. If the pie doesn't expand, but there's just more people nibbling on it, that doesn't mean you're going to make more money. So it's something really important to pay attention to.
Exactly. This is a unique question. If I sell my catalog, is there a way to get a contract with the reversion clause of any kind? So maybe just wording aside, I think you know where he's going with this.
Yeah. So there's a couple different options there. So you could do the term advance that we talked about, where there's an automatic reversion in a decade. We also from time to time do 30-year terms, where at the end of 30 years the rights revert back to you. And then, so those are the first two options. And then the third option is we will occasionally do deals where it's a buyout, right? But the seller has a buyback clause in it, where at a predetermined price, the seller can buy back the catalog from the investor who bought it on our site. And the way that works is the investor who buys your catalog has to sell it back to you. There's no negotiation. It's like, here's the price, and if you pay them that price, you get your catalog back. So those are the three different ways you can get the rights back.
Okay. So there's a couple of questions again that kind of went to requirements to be included. I think we talked about that, basically $1,000 in royalty income a year for the portion that you want to sell. I want to add that point of clarification. You can earn $10,000 a year, but you got to sell at least $1,000 worth of it. Do sample clearances and non-clearances of songs add value to songs?
So if you use samples and they're not cleared, your song it's a ticking time bomb. If you're getting paid from it and somebody figures out that you didn't clear the sample, you're not going to get paid from that pretty soon.
Let's flip that.
Yeah.
Flip that. What if yours is the song that is being sampled?
Yeah.
So you're selling a portable song. Do you? You know what I'm saying? Are you?
Yeah. So the way we do deals is the songs that are currently in your catalog are the songs that we work with, and there's a really important nuance to this. So let's say you have a song. It's called Anthony Has a Blue Hoodie On, right? And that song's making a bunch of money for you, and then someone goes out and samples your song, right? What happens in your publishing account and in your PRO account is you get writing credit on the new song. It has a new name, right? And so that wouldn't be part of the deal with us. And it's one of the reasons why a lot of songwriters like working with us, because if somebody ends up sampling one of their songs down the road, they get the upside from that. And that's another big advantage of not including the copyrights, because you'll get the benefit of songs being sampled because it creates a new song for you to be paid on.
But if the sample had occurred prior to coming to us,
yep,
then it would be included, correct?
If you wanted to include it, yes.
If you wanted to include it, got it. Okay.
So if you imagine,
I know I've seen it in some of our listings. I just never knew the back end about how that actually works.
Yeah, that's how it works.
Okay. There's an interesting question here. I think this is a good point to clarify. If you sell your catalog, and what platform is it transferred on, Wave or PTX and whatnot, we're not actually transferring your actual copyrights or your actual master recordings to an investor. When you're selling your catalog, you're selling the right to receive the income from that catalog. You're retaining all those files and such yourself. So
So the way to think about it is, the way that we do the transfer is we send what's called a letter of direction to whoever's paying your royalties. And so it's like a one-page thing that says, hey, you were paying person A for this income, now pay person B. And that's it. So you still keep all of the credit. Like, no one can take away that you wrote those songs. You still have control over the copyright. And so that's an important thing to understand.
Okay, and there's a point of clarification around the 1,000 here. It says, do you mean I would need to make $1,000 in song royalties in order to apply? Yes, you will have to show that your royalties have been earning at least $1,000 a year prior to coming with us to offer that to an investor to evaluate to buy, because what they're doing is they're buying royalty income, not a potential for income that not exists yet. That's so I just I'm hoping I am answering that question properly. Is there how does an independent artist get value on their catalog? I think I want to switch that to being, is there any difference if you're independent versus a major label, whether it's recording artist or independent publisher versus major publisher songwriter, that there's really no difference?
Yeah, no, there isn't. I mean, I think there is a difference in the relative value of master's income versus publishing income. But other than that, there isn't any difference.
Okay. Let's see here. I think, here's one last question. I knew I wanted to save this one. This is another interesting one. Should I wait until my contract with a small label has run its course and I get my master's back before working with someone like us? Does that matter?
It doesn't really matter. I mean, I think to work backwards from what we were saying earlier, if you want to raise money to invest in your career and keep going and go further faster, then you should work with us when the time is right. And that's independent of your current deal, right? And the way it would work, if you were signed to a small record label, and let's say you have a 50-50 split with that record label, we could work with the 50% of the income that you're collecting from the label, and that's what we would do the deal on. And then when you get your rights back from the label, you get the other 50%. So then you could take it to another label, you could put it on a digital distributor and pay much less in fees, and still collect that difference. And so that's the way we would look at it and think about it. So step one, figure out what you're going to use the money for. And if you want to raise the money to invest in your career, then let's talk about it. If you don't, then don't worry about it. And the third thing is, when you get the rights back, you're actually going to get the rights back. The investor isn't going to just pay you for 50% of your income today and then magically get 100% of your income when the rights revert back to you. I've seen deals like that, and I think those deals are bullshit, because they're not paying you for the value of your stuff in the future. So we don't do them, right? So if there's a reversionary interest, you're getting that reversionary interest if you work with us.
All right, that's basically the questions that we had that we were able to answer anyway, left in advance. If there's any last minute questions you want to send via Q&A, please do so now. Otherwise, Gary, thank you for taking the time to answer all these questions in great detail. Thank you to all of those who registered and left such great questions in advance. For those of you on the actual recording, thank you for your interaction and your engagement. We got some great questions here. We hope we answered them all today. Again, no more questions coming in, so look for the recording afterwards. Gary, any closing statements, thoughts?
No, I mean, if you want a free catalog valuation, come to our site, click raise money, and you could start the process there.
All right, great. Listen, thanks very much, everybody. We will do these. I think we're planning on doing them weekly for the foreseeable future. We may alter that based on demand and whatnot. But anyway, this is not your last chance to ask questions. Please, if you're watching the recording of this and you weren't on live, please join us live next time. We'd love to have you on and answer any question that you have. So thank you very much.
Thanks, everyone. Bye.